Sri, we were at 1617, and you had already made your you had already switched from your long-standing 1% call that went back years, and you said we'll go to 2, and then we had a left turn on the way to Albuquerque, went back to 1.2. Now we're back to 1.5. You're convinced this time that is when we get to 2. You thought we'd get there last time. This time we do get through the old highs on the yield and up to 2.
Joe, if you recall what I've been saying to you since January 5th, that in a matter of a few months, we are going to head to 2%. There was no call in between. There was no trading advice regarding how we would get there, whether it would go down before it goes up. I still believe in my 2% target. We are about 45 basis points away. I still believe that we'll be there before the end of the year. It could well happen in a matter of a few weeks. But if you say to me, will it go from 155 to 140 or 135 before it goes up again? Sure, it's possible. Right. All I'm saying is you are looking for it to end up at 2% and then reevaluate after that.
So, Rick, I guess the point I was making was stocks have already digested 1.6 or 1.7, and then remember Tepper came on and said they're going to stop here and maybe trade around for a while. They actually went down. So I don't see why this would become a big issue for stocks unless this time we go right through those old highs and to 2. And also, Rick, I don't understand why we had no price discovery. There's no reason. We could not explain 1.2 or 1.3 except for maybe global inflows or something, I guess. But what's changed there? The transitory, the inflation fears? What's changed in the last month from having those crazy yields back then? Now they're not quite as crazy.
Oh, I think that the move has been so compelling, the underlying inflation rates have been so compelling that even though the smoke signals are highly distorted for most markets that the government has their thumb on the scale, that the signal is still eking through even in its most handicapped form. I mean, right now you have break-evens in the Eurozone, 5-year break-evens at the highest level since the spring of 2012. They're 10-year break-evens at the highest rate since 2013. We're looking at their inflation coming out. Their CPI will be coming out, and most likely it's going to show very similar moves. And we can argue about transient or not, but in the end, markets are supposed to be pricing right now. What's inflation right now? There's supposed to be some built-in mechanism here, self-adjusting, send signals to the world that you're spending too much money, that $300 trillion in global debt is too high. But if you squelch the signals, well, you can kind of go on, and the music goes on, and the band keeps playing. But it is starting to break through. And your last guest is a very smart man, calls a lot of turns. I've been much more generic. About a month ago, we held 112 intraday on a double bottom, and it's been off to the races ever since. To close above 137 to 139, we talked about ad infinitum. The minute you closed above it, you have not looked back. Can it go to 2%? Sure it can. But at some point, we're going to see that mystic thumb on the scale again somehow, because there's no way any of these treasuries around the world and any of the advanced economies could possibly afford where I think interest rates could go with respect to how much it costs to service the debt.